There aren't many companies that can claim having paid dividends through the American Civil War and started paying dividends less than 50 years after the founding of the U.S. The York Water Company, NASDAQ ticker symbol YORW, is the company with the honor of having the oldest and still active dividend in the world. It's the quintessential dividend stock. It's the oldest investor-owned water utility in the United States of America, and you'll find it operating in Pennsylvania, with continuing operations ever since 1816, making it a company with a 200-year-old dividend history. The company has, therefore, paid dividends for over 575 consecutive quarters. This is not necessarily the largest growth history in terms of dividend growth, but it's still a very impressive track record. York Water pays out a dividend of 19 cents per share at the moment. That's a yield of more than 2%. York Water's operations are very simple. They impound and purify drinking water for certain geographical areas. Aside from this, they own 3 wastewater collection systems and 5 wastewater collection and treatment systems. Geographically speaking, York Water's operations covers an area of 51 municipalities within 3 counties in south-central Pennsylvania and is under strict regulation by public and local commissions that oversee this work. The company works in billing, payment procedures, dispute processing, terminations, service territory, debt or financing, and rate setting with these public commissions, and must obtain commission approval before changing anything of these aforementioned procedures. The company gets its water for operations through its own distribution systems, fed by sources from the south and east branch of Coderous Creek, with an average daily flow of 73 million gallons. In addition, York Water has 2 large reservoirs that hold 2.2 million gallons of water, supplemented by a 15-mile pipeline providing access to another 12 million gallons of untreated water per day. Lastly, the company has 9 wells with the ability to serve up yet another 600,000 gallons per day. So on the sourcing side, the company is very well served. York Water has an overall service territory with a population of around 204,000 people. This includes a very mixed customer base, including very classic residential and some basic industrial and commercial with manufacturing of fixtures, furnitures, electrical machinery, and many other areas. As a water company, York Water's business has environmental dependencies, specifically rainfall. Revenue impacts can be particularly heavy during periods of dryness, and dry spells can create supply imbalances where more water is used for drinking, washing, golf courses, and other things, which can lead to government-instituted drought policies. On the capital side of things, York Water is not a very capital-heavy or intensive company and does not require large amounts of working capital to run its business. It's also not in the least dependent on any one specific customer. Its fully regulated and commission-controlled nature, given its superb earnings visibility and stability, is very similar to an electric utility in terms of how its rates are raised and worked with. York Water's time-tested operations have also given it the opportunity to expand its administrative branch in terms of sewer billing and collection services. Despite its extremely small size with a market cap of less than $1 billion and a relatively high LT debt cap at 46.45%, the company's history and nature have given it an S&P credit rating of A-, which is something to be quite amazed by. The long-term dividends make York Water quite attractive for investors. Dividends provide tax advantages and decreasing overall portfolio risk to considerably improving stock investing profits. Companies that issue dividends can provide inherent fidelity to the financial state of the company. Unhealthy companies are generally not in a position to provide dividends to their shareholders. Studies have historically shown that dividend-paying stocks outperform non-dividend-paying stocks during bear market periods. While an overall down market generally drags down stocks across the board, dividend-paying stocks usually suffer significantly less decline in value than non-dividend-paying stocks. What makes York Water such a dividend stud is the predictability of its operating model. First off, it's a regulated utility. This is a fancy way of saying that it can't pass along price hikes to its water and wastewater customers without getting approval from the Pennsylvania Public Utility Commission. While this might sound burdensome, it ensures that York isn't exposed to pricing fluctuations. Furthermore, water usage doesn't charge much from year to year. If the stock market performs poorly for a few months, water usage in South Central Pennsylvania isn't going to suddenly decline. This cash flow predictability is what allows York Water to outlay capital for new infrastructure projects and acquisitions without adversely impacting its dividend or profitability. Given the lack of question marks surrounding York's operating model, any big dip should be viewed as a buying opportunity. Don't forget to leave a like and subscribe for more. World of Finance TV has videos every Monday and Friday.